How's it going, guys? It's Louis Crypto here. I'm back with another Quant update. We're going to do the same thing as we did yesterday. If you haven't checked out yesterday's videos, please do so. Go and like that, comment underneath it, and subscribe, as well as doing that over here. Yesterday, we did some fundamental analysis on an announcement from Quant or Gilbert or whatever it was, and there was another one yesterday that I failed to talk about, so we will look at that today. So just navigate with me to my Twitter. The links are in the description. You should be following me there anyway. And if we go to the Linktree links, click the Twitter link over here, and we head down to my likes, we can see over here, if we click on it, let's read the smaller one first. Another milestone towards making blockchain simple, trusted, and future-proof. That's essentially what we were talking about yesterday. Our platform now allows you to circumvent the need for cryptocurrencies during the token deployment stage. So yeah, we spoke about this in depth detail yesterday. Make sure you check out yesterday's video. I'll probably link it in the top right corner for you, so you can just click that, watch that first, and then come back to here if you haven't already. Just want to read what this says because I didn't actually see this before. Why not use Quant for crediting gas fees to expand? We'll get into what I was going to say. You can. It's part of your subscription and usage fees. Take your credit bundles. Okay. So yeah, this is what I want to talk about. Enterprises that want to transact on public blockchains are limited when dealing with crypto or for gas fees. They face security threats, friction, and risk of asset losses when relying on signing and storing with MetaMask on an employee's machine. We've removed the friction completely, allowing enterprise to securely and safely transact with any public blockchain without the need to store, sign, or hold crypto for digital asset transactions, paving the way for tokenized of trillions of dollars of regulated assets by institutions to transact on any public blockchain and access new investors and liquidity. So what I take from this is, like, let's say we're a big company, we want to use cryptocurrencies for some business. And of course, when using cryptos, there's fees, and yeah, it could get very expensive the more transactions we do. There's also a risk of losing the cryptos by sending it to a wrong address if by a mistake. And there's also the fact that you have to make a wallet. That wallet will be on a specific person, employee or person's computer, and it's just it can be dodgy, of course. So the way that Quant is changing this, the Overledger platform is changing this. The solution essentially is that it's making it easier for companies to use these cryptocurrencies for business. Basically, they're eliminating those challenges where you have to make MetaMask. There's no risk of losing it anymore. There's no risk of paying high fees. So yeah, it's going to be everything's going to be safely transacted on a public blockchain, and you won't need to hold or store any cryptocurrencies yourself. So again, this is just going to open more possibilities for companies to tokenize and trade trillions and trillions and trillions of dollars of regulated assets on a public blockchain. So it also allows them to attract new investors, access more money, and to grow their business as well. So in other words, it's basically made it easier for big companies to use crypto without having the regular problems that we would have on a daily basis, paying those extortionate gas fees. Imagine Ethereum, guys. Come on, there's dirty Gwei. But yeah, so yeah, it's just a new pathway for the future for people to trade things on the internet. Yeah, just more new possibilities and opportunities for businesses to connect with each other and whatnot. So yeah, that's pretty much it for the TA, for the fundamental analysis. Let's now head to the TA. So yeah, now that we're looking on the daily time frame, guys, I hope you enjoyed that. If you want to see similar things like that, of course, I'd have to wait for Quant or Gilbert to actually post something. But if that's of interest, where we start off with some fundamentals, when there is some to talk about, and then move over to TA, please do leave a comment below letting me know if you like this video. If I see more likes than usual on this video, that's another sign if you can't be asked to comment, but really be appreciated if you could do one of those. If you haven't subscribed, as over 40% of you, I think it's 40% of you that tune into my Quant updates do not subscribe, it'd really be appreciated. We'd be so close to 7,000 subscribers, and that's where we're on the road to right now. So thank you guys for the continued support on the channel. What we're looking for Quant to do is, of course, continue to hold this support, looking for breaks to the upside. It's not really what should happen, but of course, as bulls, this is what we would want. I'm going to now give you the message that the chart is actually sending, which is we are at a support that I just mentioned. The path that I do want is to the upside, but the reality is we are beneath I don't know what that keeps happening, all the key moving averages, guys. The 200, the 55, the 20, and the 12. So like in this immediate short-term downtrend, we've had a fake out to the upside over here, and as I've previously shown you on the 2-day time frame, we ran exactly into that 786 fib as well as the 55 moving average on the 2-day time frame, in fact failing to form a bullish cross with this lower one over here. So we almost got one here, we had a fake out. Look at that slingshot motion to the downside, and we almost had a bullish crossover here. If I get rid of the drawings, you can see it failed, and that means we just continue with our downtrend just like the last time over here. So let's see if this, can you see how they're like quite in similar places? Let's see if this blue moving average can actually break beneath all of this. Price would already be lower than all of this for that to happen, of course. So yeah, let's see. Price is beneath, of course, but now let's see if we can drag this 12 EMA beneath these two over here. Then we pretty much know that we are returning to that range of $94 to $100. We are still holding above 101, 102, so there are still these potential chances of bouncing from here, but we can see that this trend line of that previous diamond pattern has been lost. So we broke out of the higher side of that diamond pattern over here. We had a fake out. We just tested key levels of resistance and broke the beneath it and look retesting it as a resistance. So this now technically validates that target down to $83, which I previously mentioned. If you haven't watched that video, I do recommend to do so. Just type in Quant $83 on YouTube, or yeah, Louis Crypto Quant $83. It should come up, or go over to my YouTube videos and you should find it somewhere over there. It was only over the I think Thursday or Friday which I made that video, so it won't be too far away. It won't be too hard for you to find on the channel. It's essentially talking about a diamond pattern as well as that previous head and shoulders, which we're still yet to invalidate. We've been talking about that for so long now, I don't even like talking about it anymore, but we are prepared. The target is $83 out of this. Also the diamond pattern, which is this over here, just like that. And eventually all of these lines meet if you keep extending them and keep extending them. And so we've got this diamond pattern. We're trading between these points, and then we're looking for a breakout, which it did break to the upside, suggesting a target of about $130 over here, but then actually breaking down eventually to the downside, invalidating that higher target to the upside for the moment, and then looking to actually come back down to there. Although this is still support, it looks like we're coming down to that $83 target at the moment, just as we validated this pattern a long time ago back in May. Retested its resistance, we were meant to go to the target and it failed to do so, simply because 94 over here, that wick, and this wick over here at $100 is this area that is keeping us above this range, holding this range low as support. So while this is still the case, I'm going to be constantly DCAing within this area, as I've been telling you guys constantly, and as I have been as well. And yeah, essentially while price is still remaining above this point, my expectation is eventually a break to the upside. Although we have lost this, could just be a breakdown back down to the key levels of support, looking for a retest and then continuation higher. So that would be a double bottom pattern. So I'm still going to have the belief that that could happen, as we are still above the support, as this is support, it's the bottom of the market. Any dump into the bottom of the market should eventually lead to a pump. That's what we've seen previously to the left as well as here, but not bringing such massive a pump. So you could actually say, oh, it's getting weaker, this support. So if it wants to go ahead and break it, let's see it break it on this attempt to finally head to those targets. I just want something to happen, guys. I'm so bored of this, but I know I have to make these videos for you guys daily, and that's why I'm trying to bring that fundamental analysis into it. So there's really not much to say. I like that the 2-day time frame is, you know, tightening this up. It's getting rid of half the candles on the screen, and we can see that fake out over here, which on the 1 day wasn't actually suggesting that it was tapping this as resistance. On the 2 day here, we see exact taps of resistance. So if we were to ever get back above that 55, which is $110, which is in fact where the reversal wave is created, these are some good signs, and then we would look for a pump to in and around $115, which is what we were previously suggesting before as we were coming up over here. We did get a wick over there, but we were thinking that on the reclaim of this purple area of support, that's when we're going to head up to there. But of course, now we've been using this 2-day time frame, we can actually see that the 55 was standing in our way, although it was actually above $110. I think it was at $1 high or $2 high at 112, which was a 786 fib. So we need a break of 110, flip this 107, 109 into support, break 112, and that's when we would have got that continuation. But for the moment, price is still ranging between these 2 points over here We're just waiting for a range break. There's nothing more to say other than we are getting towards that range low, looking for a bounce unless we lose it. And I'm waiting for a signal of a loss of it. I want daily candle closes below this area. I want a weekly candle close below this area. And then I'll say, guys, now we are officially going to that $83 target. But in a weird way, we are officially already going to the target. It's just that one thing is stopping us, $94 to $100. So yeah, technically, we have to say officially, and it's been for months now, officially since we broke out of this previous head and shoulders, the target has been $83. As I previously said 77, we readjusted it to 83. And we've got some other things talking about 83 being that diamond pattern that's just formed recently, as well as this wick over here at $83. So a lot of things shouting at, if we were to lose this key area of support, $83 would be that area we'd be looking for a bounce in the short term to return to this, whether that's a, let's just draw it down to 83, whether that's to hit it as resistance to continue lower, or come down to 83 and bounce and reclaim and then onwards and upwards. And this was just a fake out to grab your quant, make you sell your quant, and then potentially form an inverse head and shoulders over here. So don't you worry about too much into the future. Over here on the channel, we like to just take it as it comes, and right now we've been correcting, but you can say that this is a pump up, this is a correction down, coming down to those key Fibonacci levels, looking for that break of 110 and 112 to head up to that area, this previous resistance, which we're waiting for a break of. Yeah, could this actually be the pattern that's forming over here? Let me know in the comment section below about that pattern, as well as whether you want to see more videos like these where we do a bit of fundamentals as well as technical analysis. Guys, I hope you enjoyed it. Don't forget to smash the like button, and of course subscribe if you haven't already. It does help the channel grow. We're on the road to 7k. Let's get there as quick as possible. Make sure you're following me on my Twitter. All the links you need can be found in the description down below, which will bring you to my link tree, and this is where you can private message me on my Twitter about the mentorship, the course, or joining my Discord community. Thank you guys so much for tuning in. Please like, subscribe, and comment. And oh yes, final message, Mish, you bought my mentorship, but I've emailed you 4 or 5 times now. I'm not getting a reply, so please do get into contact with me. Hopefully you are watching this video. Hopefully you stayed until the end, and yeah, I'll talk about it in the next update as well. Mish, I don't know if it's a guy or girl. Please do get back into contact with me. I've emailed you 4 or 5 times now about the mentorship session. Thank you guys so much again. I'll catch you in the next one, and as always, peace.